Hello friends, in the series of BSE IPF, I welcome you all. We are here with a quick guide on how to save tax in a financial year. We are in a month of March. This is one of the most important topic in our mind that yes, financial year is going to end soon, and what should we do about our tax planning, or what are the options are available with us to save some tax, because saving is itself earning. If you are a employee somewhere, then your HR starts asking for the related documents related to your investments under under various section of income tax act, to save some tax, to do a tax calculation. And even if you are not employee and you are a individual who is earning or doing some business, then also March is one of the important month where we look for our tax calculations, and we look for some or the other options where we can invest or do some investments and save some tax. So here we are with various options available in the market related to the saving tax, which we can use in entire year. Though we are in the month of March, we are having very less time in our hand, but yes, we can use the same technique and the same methodology for next financial year. So let us have a look. Before we proceed, I would like to tell you that yes, these are the sessions which are coming to you with the help of BSE IPF and SEBI, because they took this initiative and they want each small and common investor to get empowered with the knowledge. So let us start quickly. A quick guide on how to save tax in a financial year. The very first section, about which all of us know and which is very much popular or commonly used, is section 80C. This is one of the most commonly used section by investing up to rupees 1.5 lakh rupees. And what are the options under where we can invest under this section? The options are EPF, PPF. We have discussed a lot about EPF and PPF. There is a separate video on our YouTube channel, so the investor who wants to know about it in detail, there is a video on ELSS also. ELSS is what? It is equity linked saving schemes. So if you want to know more about it, you can check out our YouTube channel. NPS is National Pension Scheme. Then home loan principal, if our age category is near 30-40, then if we have already bought a home, or we are planning to buy a house, then whatever EMI we are paying, the principal of the EMI, because EMI is a combination or is an addition of principal as well as interest. So whatever principal amount which we pay in that EMI is we can consider it under section 80C for saving our tax. That for example, if our EMI is say 25,000 and the principal part is 10,000 and 15 part is interest, because recently if we have taken the loan, then this 10,000 multiplied by 12, because 12 months in a financial year becomes 1,20,000 rupees. So this 1,20,000 rupees we can use under section 80C, because the cap is of 1.5 lakh rupees, or children's school fees. Then under section 80CCD 1B, what does it mean? What does it say? It says that you can further save tax by putting additional 15,000 in NPS. If you have already done some investments, whether it's PPF or NPS or even the home loan or ELSS, and if you have means like, see how the calculation works. Now if your income is say 10 lakh rupees, and if you are investing 1.5 lakh rupees, then your gross income will be 8.5 lakh rupees. Up to 2.5 lakh rupees there is no tax, then up to 5 lakh rupees in one slab, then 5 lakh to 10 lakh rupees is a one slab, and 10 lakh rupees onwards is a third slab, which is 30% slab. So first 1.5 lakh rupees will get deducted under section 80C, and you can do additional investment of 50,000 rupees. Where you can invest, you cannot invest in the options which are there in under section 80C, like EPF or PPF or ELSS. You can put additional 50,000 rupees in NPS only. If you are putting it in NPS only, then this 1.5 lakh, apart from the contribution in NPS which you have done under section 80C. If you are not doing anything else, if you have not bought any home, you have not invested in any mutual fund under section 80C or ELSS scheme, you are not working anywhere, so no provision of EPF or PPF. But if you have already put 1.5 lakh rupees in NPS, then under section 80C you will get the benefit of it. And if you are putting additional 50,000 rupees to it, so this 1.5 lakh rupees, this is above 80C. 1.5 lakh rupees. So this 1.5 lakh rupees and this 50,000 rupees, approximately 2 lakh rupees will get deducted from your gross income. So 10 lakh minus 2 lakh, 8 lakh rupees is your gross income now. So this is how the calculations are there. So we have seen two sections under Income Tax Act, section 80C and section 80CCD 1B. Then we will see under section 80CCD 2. What does it mean? Section 80CCD2, it says that deduction is available on employer's contribution to an employee's tier 1 NPS account. There are two NPS accounts, tier 1, tier 2. Again, there is a video on our YouTube channel about the NPS account. So if you want to know in detail about each and every point related to the NPS, there is a separate video series on our YouTube channel. Again, the same series is by BSE, IPF and SEBI only. So you can check it out, what is the difference between tier 1 and tier 2 and what are the advantage and benefits and do's and don'ts regarding it. So if the deduction is available on the employer's contribution to an employee's tier 1 NPS account, the maximum contribution is 10% of the basic salary plus DA from FY21. This is a new thing. Total contribution of employees and employer should not exceed 7.5 lakh rupees. Then it's taxable. Interest earned is also taxable. This is the only deduction is available in old and new tax regime. So this is under section. This is section. It is habitual to talk about under, but section 80 CCD 2. So we have seen the three sections yet. One is section 80C, most commonly used. Then CCD 1. Which says that we can invest 50,000 extra, and then CCD 2. Now we will see the fourth section, which is section 80D. What does it says? It says that premium paid for a health insurance. If I'm individual, I'm having a family with me, my husband is there, I'm having 2 children, then if I'm buying a family floater for my family, where I'm paying some 20,000 rupees as a annual premium, so up to 25,000 rupees, this amount will get deducted from the total income. So if I'm spending up to 25,000 rupees, then if 8 lakh was my gross income yet, then this 25,000 will get deducted from it. So now my gross income will be 7.75 lakhs. Health insurance premium for parents. If my parents are staying with me and if I have to pay for their health insurance also, then for their health insurance, I can get the benefit up to 25,000 rupees. So 25,000 for me and my family, 25,000 rupees for my parents. If my parents are senior citizen, then up to 50,000 I can pay for them. So 25,000 for me and 50,000 for my parents who are senior citizen. So total 75,000 I can get the benefit. 8 lakh minus 75,000. Now my gross income will be 7.25 lakh rupees. Now if a taxpayer and parents both are senior citizen, if I'm also a senior citizen and my parents are also senior citizen, then this deduction can be go up to 1 lakh rupees. So this is a very important point about 80D. Usually we say that our tax planning is already done, is already over, we need not to do anything else. Why to buy insurance, health insurance? In the corona times, we can see the reality of and the need of health insurance, so we should buy. And when we are buying health insurance, it is also giving some tax benefit to us. If your senior citizen parents are not covered under any health insurance policy, then maximum up to 50,000 are allowed under section 80D for their medical expenses. So this is also there. If there is no health insurance policy for our parents, then for their medical expenses up to 50,000 we can claim, and it is deductible from our gross income. Then 80DD, the earlier was 80D and this is 80DD. These sections are quite confusing, but we should just know that under which section and what are the variable options where we can save the tax. It says that apart from 80D, medical expenses for a disabled person or any specific person, we will be considering two sections here. Now one is 80DD and 80DDB. So 80DDB offers tax break on medical expenses incurred for dependent disabled person. If someone is there, if some family member is there who is dependent on me and he or she is disabled, up to 40% if she is disabled, then whatever the expenses which I am doing for their health, up to 75,000 can be deducted from my income. And if that person is more than 80% disabled, then up to 2.5 lakh can be claimed. What 80DDB says, it says that if I'm the person individual, if I'm facing some illness like cancer or chronic kidney disease or something like that, then up to 40,000 can be claimed for individual or dependent. So these are two sections, 80DD and 80DDB, which says that if some dependent is there in my family who is disabled, up to 40% if he is disabled, then 75,000 can be claimed, and if he is disabled more, he or she is disabled more than 80%, then 1.25 lakhs can be claimed. And if I am the individual and me or my dependents are facing any means if we are suffering from cancer or any chronic disease like kidney disease or anything else, then up to 40,000 we can claim for that. So let us take it ahead. Now, for senior citizen, this can be up to 1 lakh rupees. Then 80U. 80D says if some dependent is there in your family and who is disabled up to 40%, then 75,000 can be claimed, and more than 80%, 1.25 lakh is claimed. But if I am the individual and I am disabled up to 40%, then I can claim under this section, which is section 80U. Reduction in 80U and 80D cannot be claimed simultaneously. So this is, there are various discussions going on this, that it should not be there, but now it is there that if dependent is there, I can claim for them, and if I am also disabled, then I cannot claim both sections 80U and 80DD. So 80U is claimed by disabled individual. 80DD is claimed by dependent who has incurred expenses for the disabled individual. Reduction amount is same as of 80DD, where 80DD it was they were saying that if the disability is up to 40%, 75,000 can be claimed. If disability is more than 80%, then 1.25 lakhs we can claim. So this was 80U. Then section 24. Apart from the loan, see, this is one of the most important section for saving the tax. If I'm the individual and me and my husband have decided to buy a home, and if we have bought a home and our EMI is 25,000, as we have discussed, because we took this example earlier, 15,000 is going for interest and 10,000 is going for principal. So this 10,000 is deductible under section 80C, but this 15,000 multiplied by 12, when we say 15,000 multiplied by 12, it crosses 1.5 lakh, it becomes 1.8 lakh rupees. So up to 1.8 lakh rupees we can claim under section 24. The interest up to 2 lakh rupees can be claimed under section 24. This will be deducted from our gross income. So 8 lakh rupees in ATC and ATCCD1, 10 lakh rupees was the gross income, 1.5 lakh in ATC, 50,000 in ATCCD1. So 8 lakh rupees were remaining. 80D for me and my parents, 75,000, then 7.25 lakh was there, and now we can take the benefit up to this 2 lakh rupees. So 5.25 lakh will be there. So this deduction is available only on self-occupied property. This is important. We can underline this. If I am staying in this home, and if this is the home on which we have taken the home loan and we are paying the EMI, then only we will get this benefit. If you are not staying there, then we are not going to get this benefit. Then if you are paying interest on home loan for under construction property, then you can claim it after possession, provided it happens within 5 years. It can be claimed in 5 equal installments after getting the possession. Then section 80EEA, what does it says? If you have taken home loan to buy a house under the affordable housing segment, this is a new segment in FY 2021. This is a new segment called affordable housing segment, where if you are buying any home in that, then interest up to 1.5 lakh rupees. It is above 24. So above 24, above section 24, 2 lakh rupees is deducted in under section 24, and this 1.5 lakh rupees additional we can get the benefit here. So there are certain conditions you must satisfy before claiming this tax benefit under section 80EEA. So then 80G is contributing to charity, can also help to save tax. If we are doing charity to some PM relief fund or some CM relief fund or some government schemes or anything like that, or NGOs which are having the sanctioning of 80G, then up to 100%, whatever we are donating, up to 100% we can get the benefit, and that much amount will get deducted from your gross income. 80 TTA, if you are putting some money in saving account in post office and fixed account and somewhere like that, whatever interest we are earning up to 10,000, we can take the benefit. This 10,000 rupees, because this interest will be considered as an income from other source, and this will get deducted from up to 10,000 rupees. We can claim it to deduct from our gross income, so we can take the benefit under section 80 TTA. 80 TTB says if you are senior citizen, then up to 50,000 we can take the benefit. Then ATE, this is a last section. The interest paid on education loan will also get you a tax break. Only individuals can claim. HUFs are not entitled for this deduction. This is the most important thing. There is a query several times that please tell us about education loan, and definitely we are going to come back to you with the special video on education loan. But so far, this benefit is available for 8 years from the loan date. So these are some sections, these are some options for us under which we can save some tax, and saving is itself for earning. So though we are in the last month of this financial year, but we can use the same methodology for next financial year. We should plan wisely. Financial planning is most vital thing in the life. If you have not planned yet, then do it now. But because it is very important for our better future. If you are saving some tax, then definitely that amount will be available for investments, and investments will bring a prosperity in future. So for bringing the prosperity, it is very important to plan now, and this is what the initiative by BSE, IPF and SEBI. There are various options. If you and your spouse are working together and he or she is also earning, then by clubbing your income, by doing some loan tricks, means like you can take home loan on two names, means like yours and spouse name. Then also there are more options, or there are more benefits where you can save more tax, but for that you need to consult your tax consultant for that, or you can talk to CA. So thank you very much for liking our sessions. It was a very long video, but it was very important video for at this time of an hour. So thank you very much for liking our session. Stay tuned, and we are writing our email address in our description section. So if you want to if you are having any queries, do write us. We will try to solve it. And if you want to know more about any different topic, then do let us know. We will try to come back to you on that topic also. Thank you very much. Stay tuned. Still corona is there. Stay safe and stay at home. Thank you very much.